It's another busy week for earnings, and we're going to get a lot of consumer focused companies this week. Finally, what are they doing? Is the consumer still holding up? Are they spending on the vacations? Are they buying new homes? Are they going to the Home Depot? We don't know, but we are going to get some insights this week, and it's going to be key. So, what are the 5 consumer focused names you should be watching this week? I brought the charts. Let's dive right in. So the first one is one of the premier retailers out there, Tractor Supply, ticker TSCO. And this is for Life Out There, which is the rural retailer. And you can see they have a very good earnings surprise track record. They had those 2 misses in 2023, but then you had to go back before the pandemic, all the way back here in 2019. You can see one little red barely missed there, just 0.55 in 2019. And then right before the pandemic started, another small miss of just 1.6%. But otherwise, they have a very good track record of meeting or beating. We see last earnings report in April, the surprise was 7.7%. So these shares busting out to new 5-year highs here in 2024, but falling a little bit off of those. 1 month, the shares are now down 4.7%, trading at 26 times. So Tractor Supply is not cheap, but if the consumer keeps spending, maybe it's still attractive here. And this is the big thing that's up in the air. What is happening with this consumer, especially the ones in the rural areas? We're about to find out, but this is definitely one to tune in this week. Then we're going to switch it over to a stock that I've talked about many times here on the Earnings All Stars because it's been one of the hottest stocks of the pandemic, and that's Pool Corp. Because we were doing staycations during the pandemic, we were installing those pools, all the outdoor goods, and you can see this huge rally in the shares off of the pandemic lows up to new highs, and then things did cool off. As the economy opened, less people needing to put in the pools. So the shares did tumble in 2022. Otherwise, they've been mostly trading in this narrow trading range, waiting for a catalyst of some sort. But they did miss on earnings. This last earnings report, just barely 1%. But recently, before this earnings, this latest one, they did report. They didn't report. They reported some preliminary numbers, but they warned on full year guidance. Basically, fewer people are now putting in the new pool. They still have a large business on maintaining the older pools, right? Somebody's got to maintain all that. And then outdoor goods and stuff were still holding up fairly well, but fewer people putting in the pool. Now, some of this has to do with the cost of the pools and that you're going to borrow money most likely to do it. And we have those higher interest rates, which is making borrowing more expensive. So people are on the sidelines with putting in the pools right now, but they did warn on full year and cut that full year guidance. So the shares took about a 10% decline. You can see them falling here, but they are a little bit off those lows now. So 1 month, they're only down 3.3%, still trading at 29 times though. So not real cheap here. And it is a Zacks number 5 strong sell here because of the earnings warnings, the adjustments to those earnings, they were all slashed. And so we're going to get the number 5. Now, was it smart to warn well ahead of earnings? Probably. So now we're not thinking, are they going to miss as quite as much? Or, we already know what's happening with the consumer with Pool Corp, and the street doesn't seem all that nervous about it. So this is going to be an interesting one to get some more further color since that warning on what is really happening out there. Now, one risk could be that things have continued to slide even more than when they were warning, and they might have to cut again. That would really hammer these shares further. So we'll see. But Pool Corp, we already know that the consumer is slowing in the pool category. Okay, then I want to include one of the airlines, and I chose Southwest Airlines because This is a low cost carrier. They don't have quite as much exposure to the international market. They do go to like Mexico and the Caribbean, but they're not flying, over to Europe or going to Istanbul or anything like that. So it's more of a pure play on the US consumer than some of the other airlines might be. But look at this chart. It's been a little rocky for all the airline stocks coming out of the reopening after the pandemic. But these shares, pretty depressed here. 1 month, they're down 3.5%, and they did miss on that last quarter. You can see it was a 5.9% miss there. So a lot of the negativity is probably baked into these shares already, but we will see, what they're saying this week. But a little bit of a capacity issue for some of the airlines now. And as the consumer pulls back, those the price of those tickets is starting to decline a bit. And so that's bad for the airlines, good for the consumer, right? That we're going to get cheaper airline tickets. But a lot could be going into this one. So I'll be tuning in. Southwest Airlines, ticker LUV. And then we're going to switch over to further retail on the shoe side of things. One of my favorite stocks is reporting this week, Deckers Outdoors. This is the UGG, maker of UGG, plus Hoka now. So they got the two blockbuster brands. Look at this chart, just one miss back there in 2021. That was on supply chain problems and excess inventories, which they quickly dumped. And now it's pretty much been off to the races here. Big, huge beats. Look at this big, long green arrow last quarter, 75% beat. How do they do that? That is amazing. But the shares have been on a real downward slope here after hitting those new highs. And they're down 11% in the last month because some are just thinking maybe it's just, too expensive for the stock here and that they can't keep doing this good a business with the consumer possibly pulling back, but we don't know. Shoes are always popular in a recession, even more expensive shoes. And certainly these are on a little bit of the pricier side, but they've got the strong brand. Deckers now trading at 28 times. What's going to happen here? Is this a buying opportunity with this sell-off? I don't know, but this is definitely one I'm going to be watching. And then we're going to stay on the shoes, but we're going to go to the cheaper shoemaker, Skechers. Now, Skechers is worldwide. If you've ever been over to Europe, you'll be walking around some major European city and you'll see a Skechers store there. They're huge in Asia as well. These are big markets, including, China, but they have been killing it. They're on trend, at least in the US. And you can see they've got a pretty good earnings surprise track record that they've put together since 2022. No miss there since 2022, 6 beats in a row. Shares were hitting new all-time highs, have pulled back a little bit off of that, but only up 1.6% now year to date because of this little mini pullback, but this is a cheaper one, trading at 15 times earnings. It does have the Zacks #1 rank because those estimates are still holding up higher there. But this is one that's going to tell us a lot about the middle class and, those types of consumers. And they are entering into a big selling period coming forward here with back to school looming on the horizon. And yeah, we're still buying our gym shoes, our trainers, back to school, all that's going to be happening. But Skechers also more than just gym shoes. They've got sandals, boots, various other things. And I'm a big fan. So I'm going to be watching this. I own it in the Zacks Insider Trader portfolio for a while now. Some of the insiders bought months ago in this stock, and it looks like they had it right about how hot their business was. But can this continue? Is the consumer still going to be diving in on these more affordable shoes? We will see. So as you can see, these are some interesting consumer names. These are ones I'm going to be watching along with the home builders. We're getting multiple home builders this week, including Pulte, Meritage, TriPoint, Taylor Morrison. I'm not sure if that covers all of them, but that's a handful of them right there. So you want to tune in to all of these types of consumer focused companies, because that seems to be the big question that's out there. Are we finally seeing the slowdown with the consumer here? And will he and she pull back for the next couple of months? We will see. So be sure to get all of our videos here. I'm doing them every week during earnings season. You can get them on Zacks.com/YouTube, on my Twitter feed, on Zacks' Twitter feed, on Zacks.com. But make sure you get us somewhere, and I'll see you again next week with some more earnings charts.